only choose to hold on to one single dividend growth ETF forever. This one and only ETF would have to have some very important qualities. This ETF would have to have a long-term historical track record of paying dividends. And this is because this one and only dividend ETF will likely be the ETF that pays my bills during retirement. But on top of that, this one and only ETF would have to have some massive capital appreciation along with that. Because even though getting paid dividends on a consistent basis is great, I also want my overall portfolio to grow in overall value long into the future. The only last thing that I would ask out of this one and only dividend ETF is that it has some healthy dividend growth, which means the dividends that get paid over time are going to keep up, if not beat inflation, and continue to give me raises long into retirement. Now, the one and only dividend growth ETF that I would choose, if I could only choose one, would be the SCHD ETF. Now, stick around until the end of this video because we are going to go over exactly all the SCHD ETF has to offer and why, in my opinion, it would have to be the one and only ETF if, for whatever reason, I was only allowed to hold on to one. Now, we're going to go through all this and more. Right after you please drop a like on this video and subscribe for more content like this in the future. So first, let's get a little bit of a backstory on SCHD and learn more about the ETF. Now, if you don't happen to be familiar with what the SCHD ETF is, it's also known as the Schwab US Dividend Equity ETF, and it's a very popular exchange-traded fund that aims to provide investors with exposure to high-quality US dividend-paying stocks. The fund is managed by Charles Schwab Investment Management Group, and this fund seeks to track the performance of the Dow Jones US Dividend 100 Index. Now, this index is comprised of 100 US companies that have a history of consistently paying and raising dividends over the long term. These companies also have a track record of strong financial performance, which makes this fund, in my opinion, very high quality. Now, just like any other ETF, SCHD is easily purchased on most exchanges and with most brokerages offering fractional purchases. What's great about SCHD is that even though it does pay a substantial dividend, which we are going to go through here in a second, the ETF also has some massive capital appreciation, which means that in theory, whatever you buy SCHD today, it's going to be worth much more down the road. At least it has done that, historically speaking. And SCHD in the max time frame is up 181.97% on the chart. Now, this ETF also has a very cheap expense ratio, which means that investors are not going to have to pay all that much for holding on to a high quality ETF like this. The expense ratio is just 0.06%. This ETF pays the dividend every single quarter and has paid around $2.64 over the last trailing 12 months. The Schwab US Dividend Equity ETF's assets under management, how much money is in the fund, is $48.29 billion. So this ETF is very large, one of the largest across the entire market. Now, another thing I love about this ETF is the fact that it's heavily diversified. I'm a little bit more of a scared, more conservative investor personally, so I like to have my portfolio, I would say, even over diversified because it just helps me sleep better at night. But SCHD's holdings are industrials at 17.56%, healthcare at 15.52%, financials at 14.30%, consumer defensive at 13.32%, consumer cyclical at 9.68%, energy at 8.82%, communication at 4.66%, basic material 1.94%, and utilities at 0.28%. Also, the top 10 holdings for this ETF are very recognizable and have a history, a long-term history, of not only paying dividends but also raising dividends over the long term, which gives this ETF a very fast dividend growth rate. The top 10 holdings are companies like Broadcom, Pepsi, Cisco, the Home Depot, Coca-Cola, Texas, Merck, Pfizer, UPS, and Chevron. And overall, SCHD has around 100 different companies that do change out from time to time, but as of right now, the top 10 are very solid. Now, getting into the Schwab US Dividend Equity ETF's dividend yield. The current trailing 12-month dividend yield is around 3.6%, which offers a very decent starting dividend yield for investors that would buy some shares of this ETF right now. The annual payout is around $264, and the 5-year dividend growth rate is over 15%. Now, looking at this ETF's quarterly payouts as far as dividends go over the last 10-12 years or so, it's obvious to see that the dividends that have been paid are continuously getting bigger and bigger, which means investors that get into this fund early will likely see some massive dividend growth in the future, and also will be able to have their investment money stretch a lot further and earn them much more money in the form of dividend payments that can definitely help investors retire early. So now that we all understand exactly what the Schwab US Dividend ETF has to offer as far as dividends paid historically, capital appreciation, the ETF's holdings, and more, The last thing I want to go over specifically on why I love this ETF and why this ETF is going to be my largest position long into the future in my overall 7-figure dividend growth portfolio. The reason being is that the Schwab US Dividend Equity ETF has some massive dividend growth, at least historically. So what's pretty cool about this chart is you can see all the dividends that SCHD has paid historically. Back in 2011, for example, this ETF only paid around 12 cents. In 2012, it paid around 81 cents for the entire year. In 2013, around 90 cents for that year. And as you can see historically, the fund has been paying shareholders a lot more year over year just for holding onto the shares. Now, I think it's obviously important to note that just because this ETF has been growing the dividend year over year does not necessarily mean that that's what's going to happen in the future. Anything can happen in the future. But looking off the historical performance, SCHD has a dividend growth rate on the 10-year time frame of 11.35%, which is very, very impressive. On the 5-year time frame, the dividend growth rate is 12.24%, and on the 3-year, much higher, 14.05%. So if we were to assume an annual dividend growth rate for SCHD of just 10.03%, which means the dividends double every 7.2 years, this ETF in the future could pay as much as $3.10 next year in total. The year after that around $3.41. And as the years go on, it just compounds more and more and more. And once again, I'll say it to be clear, this is just a future estimation. Doesn't mean that it's going to happen, it means that it could happen. But simply put, because of the potential of massive capital appreciation, massive dividend growth, and a really good track record so far, this ETF would easily be the only ETF that I would hold on to if I were to only be able to choose one for the future. But I want to hear what you guys think down below. If you were only able to buy one dividend growth ETF from this point on until forever, which ETF would it be and why? If you enjoyed this video, make sure to please drop a like on it and subscribe for more content like this in the future. Thanks for stopping by, guys, and I'll see you in the next one.